how do you ensure that in equities, for example? What's the current advice be versus what it may have been at the start of the year, for example?
Sure. When we began the year, again, from our perspective, we have our internal models just to know if our upper range for a balanced portfolio is 60% and lower range is 40%. So depending on the market, we will be either overweight, underweight or neutral. So we entered the year with a slightly underweight position on the equities because if you remember last year, end of last year, the market had significantly rallied and the allocation had skewed in favor of equity, and our advice was to be slightly underweight. And our model is simple model which works into looking into the not only the price to earnings of the market but the price to book value, as well as what's the ratio which is called the Baer ratio, which is essentially the bond yield to the earnings yield, because end of the day the equity valuations are dependent on how the fixed income market is also performing. So basis that, it was underweight. As we speak, while we had gone down significantly, so we by May or June we were slightly overweight because the market had fallen significantly. The fixed income market was okay as far as India is concerned, so it was slightly overweight. But today as we speak, our models are signaling neutral position on equity, so it is 50, so it's between, so it's neither overweight nor underweight. And if market were to rally hypothetically, say closer to 18,000 level or so, it might get an indication to be underweight to closer to 40%.
Do you reckon it will happen 18,000?
I guess I knew.
No, but yeah, it's about a hypothesis. Is your hypothesis that we'll reach 18,000 first, or do you reckon we'll hit lower grounds first?
See, Niraj, here at least in last 3-4 months, Indian markets have been dancing to the global tunes, right? And globally, as we speak, at least so to say, it is from a US Fed perspective, it is dove at first sight, I guess, right? So people are sensing that the Fed is getting a little bit not dovish, but as he said, data determined decision they'll be taking. So there is a rally in the market. And then if technically from a US market perspective, it is a bear market rally, and bear market rally can be very powerful. So that can take the market higher. Indian markets can just follow that, and the momentum of FPI flows can take it, right? We have seen it in the past. So while they have been seller and selling has been absorbed, but when they are buyers, they just buy it and take the markets higher.
Yeah.